The volatility in copper prices can be attributed to a combination of factors related to both demand and supply as well as other influencing elements. On the demand side, construction booms in countries like China and India have significantly increased the need for copper. These rapidly developing economies are undertaking massive infrastructure projects that require substantial amounts of copper for electrical wiring, plumbing, and other applications. The growing use of copper in renewable energy technologies and electric vehicles is also driving demand. Renewable energy systems such as solar panels and wind turbines rely heavily on copper for their electrical conductivity. Electric vehicles also require significantly more copper than traditional combustion engine vehicles due to their electric motors, batteries, and charging infrastructure. Additionally, the replacement of aging copper infrastructure in many developed countries is contributing to the overall demand. As copper pipes and wiring systems reach the end of their lifespan, they need to be replaced, further increasing the demand for new copper. On the supply side, production disruptions have played a significant role in the volatility of copper prices. Events such as Hurricane Katrina have disrupted mining operations and transportation networks, leading to temporary shortages of copper. Mine closures in Mexico and South America due to labor disputes and safety concerns have also impacted the supply of copper. Labor strikes and safety regulations can halt or slow down mining activities, reducing the amount of copper available on the market. The COVID-19 pandemic led to reduced mining capacity as companies implemented safety measures and dealt with workforce disruptions. Lockdowns, travel restrictions, and social distancing protocols impacted mining operations worldwide, resulting in lower copper production. Low inventory levels have also contributed to the problem. Stockpiles of copper have been depleted during the pandemic as demand remained strong while supply was constrained. Smelters and refineries, which process copper ore into usable metal, have been operating at reduced capacity due to various factors including maintenance issues and environmental regulations. The limited development of new copper mines is another factor affecting supply. New mines take a long time to come online due to the complex permitting processes, environmental assessments, and infrastructure development required. The high capital costs associated with building and operating copper mines can also deter investment. Environmental risks such as water pollution and habitat destruction further complicate the process of developing new mines. Other factors that influence copper prices include speculation, global economic uncertainty, geopolitical tensions, and the value of the United States dollar. Speculation by investors can drive up copper prices as they bet on future demand. Investors may purchase copper futures contracts or invest in copper mining companies, anticipating that prices will rise. Global economic uncertainty can also impact copper prices. Concerns about inflation, interest rates, and economic growth can lead to fluctuations in demand and supply, causing price volatility. Geopolitical tensions, such as sanctions on Russia, can disrupt copper supplies. Russia is a major producer of copper, and sanctions can restrict the flow of copper to the global market. The value of the United States dollar can also affect copper prices. Copper is typically priced in United States dollars, so a weaker dollar makes it more attractive to overseas buyers, potentially increasing demand and driving up prices. The complex interplay of these demand, supply, and other factors contributes to the volatile nature of copper prices. Understanding these dynamics is crucial for businesses and individuals involved in industries that rely heavily on copper.